What's up, guys? Alibaba just posted Q3 earnings today, but the stock made multi-year lows. It is literally sitting at the lowest prices it has seen since January of 2017. So in today's video, I'm going to break down that earnings report for you and give you my thoughts if the company is truly a dying company or if we should be loading the boat. I'm also going to go over the chart, give you those levels that you should be looking to buy, and help you identify where the price could be headed from here. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. In today's video, we're going to take a look at Alibaba. I wanted to give you an update on it because I haven't made a video on it in a while. The stock has gotten pulverized, guys. It has done nothing but just make new low after new low after new low. And the earnings report came out and investors were not very impressed. I will admit, the earnings report was not phenomenal, but I didn't think it was that bad. So we're going to check it out today. You know that we're going to go over the discounted free cash flow sheet so I can give you my intrinsic value per share of what I think the stock is worth. Then I'm going to go over the chart and give you those levels that you should be looking to buy or average down. Give you my strategy of what I'm doing moving forward, and then also the price targets of where it could be headed in the future. Real quick, guys, before we get started, if you're new around here, subscribe to the channel if you want to see more videos like this. Also, like the video so it gets out there to more people, and then come join us at the Patreon if you want to be part of an amazing family and get all of our trade setups. Day one squad, I love you so much. Thank you for your support. It really does mean so much to me. But let's go ahead and get started, guys. First thing we're going to look at is just that earnings report, guys. So real quick, the earnings, again, like I said, they weren't amazing. And they did post some of the slowest revenue growth that they have seen since 2014. And so I do think that a little bit of a sell-off has been justified because 2021, it seemed like every earnings report had some issues in it. So I'll touch on a couple of those things. But real quick, you can see Alibaba posted Q3 non-GAAP EPS of 16.87, and that's Chinese dollar, which converts to about $2.67. And they did beat on their EPS. Right there, it says 0.82 cents, but in American US dollars, that converts to about 16 cents. So the EPS beat wasn't massive, but nonetheless, they still beat on EPS. The revenue was a miss, though. And like I said, the slowest revenue growth they've seen since 2014. You can see they posted about 38 billion in revenue in USD, and they only missed by about 500 million in USD. So it's not like they missed on revenue massively. They just missed by a small margin there, but they did grow revenue at 9.7% year over year. So there was a couple other metrics that were down, I will admit. The free cash flow was down. A lot of metrics were down. But overall, guys, they still are showing that they can continue to grow revenue, grow 38 billion in revenue at 10%, which is insane, and also be profitable. Like I said, over 2021, guys, I mean, when you start considering like the Communist Party of China, the crackdown they had on all the tech stocks, when you start looking at like the $2.8 billion fine that they got hit with, losing their KSE status, the sell-off makes sense, right? I think it was a huge overreaction, but all of those things considering, I mean, between the stock losses and the impairment charges alone, guys, that's like 5 billion taken out of their GAAP EPS, their GAAP earnings. So, it's not like nothing was causing this. There was things in there that caused them to have lower earnings. And I do think the earnings will eventually start to pick back up towards the middle to end of this year. Like, I think the next earnings report will look a lot better than this one did. And when you start thinking about like 2021 earnings were pretty bad for Alibaba. And, so moving forward, even if they don't like kill analyst expectations, but they show an improvement over the 2021 earnings reports, I think they'll be in good shape. They'll be just fine. The other thing, guys, is the adjusted EPS was higher than expectations. It just wasn't amazing. Like I said, it was still up. In the trailing 12 months, though, the adjusted EPS dropped 21%, where the stock has dropped like over 60%. So again, I think the sell-off was definitely overreaction. I don't think it was justified in that much, that depth, right? I think it was justified to sell off a little bit, but not that much. Real quick, guys, let's jump over and take a look at the discounted free cash flow sheet. You know I want to look at this. Haven't showed you guys it in a while. They're guiding to grow at, I want to say, at least 15% a year for like the next 6 years. Like, they're still guiding some pretty large revenue growth, and so are analysts. The analysts are expecting pretty large revenue growth as well. But I wanted to be super conservative here. If we take a look, you can see I put their revenue growth at 10% from today for the next 5 years. Then I discounted it down by 10%. The free cash flow margin, I'm using 15%, which is it's a stout margin, right? But they're currently doing 19%. So that's still 4 percentage points off of what they're already doing on a bad quarter. So I think that's pretty justified. That gives us an intrinsic value of $169.70 today, guys, today. Not down the road, today. So obviously, if they can continue to grow at a quicker rate, like if they were to grow at 12% revenue, $184. And if we put that, free cash flow margin at the 19% they're doing today, $233 per share of what I'm coming up with as an intrinsic value. When you look at their valuation metrics, guys, their PE is around 15. Their price to free cash flow is perfect, super low. I think it's like 6. And their price to sales metrics are perfect. So, I think the company is getting down to that point where they're undervalued. Like I've said before in other videos, I think Alibaba could be a $500 or $600 stock in the next, 7 to 10 years. But take a look at the EP or the PE analysis as well, guys. I put in Google, JD, Baidu, and Tencent, and an average out of all of those is about 26.1 on their PE. Alibaba's currently sitting at 15. And so if we don't give them any advantage over these other competitors, like if we don't give them a discount or think they deserve a higher PE, the target would be 26.1 because that's the average, which would be a target price of around $200 at a 26 PE. I think 26 PE is a little rich, but when you take into consideration all of the competitors, I mean, Google's currently trading at 46 PE. That's really rich. So just wanted to show you guys that because I just think that Alibaba's getting down to those levels where, I mean, I've already said before, it is the biggest position that I have in my dollar cost average portfolio and in my personal regular portfolio. I just think it's that good of a value at these levels. If we jump over to the chart though, guys, so we've looked at this chart before, guys, and I will admit, I mean, it doesn't look great. It's like I said, it's been selling off since literally October of 2020. I mean, it's gotten just beat down, but it's getting down to those deep value perceived areas. I mean, it has made pretty much a full reset. If we take our fibs from the all-time low to the all-time high, like we're currently sitting right at that 786, and where we fell today, like where it gapped down on open, you can see that we're pretty close. We're getting down to that 886. And so today was an insane day in the market, right? Everything gapped down in pre-market and then had an insane rally to get back up and close that gap. And so I think that $88.95 down there at that 886 would be the most optimal level, right? Because that 886 is also confluent with the IPO price, the initial all-time candle high close, the highs from clear back here in May of 2015, the other highs from November. I mean, it is a very, very optimal price. And if it can get there, $88 for Alibaba is beautiful, right? Beautiful. If we take a look at the oscillators, we are starting to show signs of seller exhaustion. And so, these are the levels that the asset could reverse at. I would like to see it get back over 111. I would really like to see it get back over 120. That's the all-time high from back in 2014. If it can get back above $120, I think we are in really, really good shape to see, at least 153, 164 again. if we don't get back above like 111, like if it was to pivot here, come back up, test the bottom of that as resistance, I think we are absolutely going to go down and see that $93.88 level around that 886. And honestly, if we break that, we're probably headed back down to, $60, which would be the all-time low. I don't think it'll get there. I do think we might find support somewhere around in this area because these are the levels that assets typically, reverse in. If we jump over to the weekly, you can also see clear signs of seller exhaustion, guys. I mean, it has done nothing but sell off since October 2020, and you've got like triple MACD bullish divergence on your MACD, and you've even got local bullish divergence on your relative strength index. So, if you take a look, it had the lowest level of relative strength back here in August, but you've got bullish divergence developing. And so I think, these are the levels that you need to be watching for. I think if you can get back above that, 111, 120, you'll see 155, 164 pretty quickly. But I actually think that anything over 120 will eventually be 200 again, because that's, historically, that's kind of what happens. Now, obviously, this thing could continue to fall. The earnings could fall apart, but I mean, they're such a big company priced at such a good level right now. And what we had in the market today was a huge statement, guys. I mean, the NASDAQ rallying like 6% after that huge gap down was insane. Now, there is a lot of war going on right now, like Ukraine just got invaded today. So we could see some continued down, marks. But I think overall, I'm sure some of you guys have heard the saying, the best way to cure a failing stock market is a good war. So, I think eventually this thing will pivot and see way higher prices. I've already said I think it's a $500 stock in the next 7 to 10 years, and I think 310 will absolutely, be reached again within the next 2 years. So that's it for today, guys. Let me know what you think down in the comments. I'd love to hear it. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join us at the Patreon if you want to be part of an amazing family, and I'll see you guys in the next one. Peace.